Welcome to Sarwa's Investment Academy, where we empower you with the knowledge and tools to make informed investment decisions. In this video, we'll explore the importance of keeping an eye out on your investment costs. It shouldn't come as a surprise. Investments come with costs, and keeping them low makes a significant difference in your overall returns. Let's take, for an example, an individual who invests a lump sum of $50,000 and invests it for 20 years. As an illustration, let's assume that you achieve an annualized return of 7% every year. Well, if you had no investment costs, your portfolio would grow to a very healthy value of $193,484.22. Now, if you were to pay just 1% in fees every year, your portfolio value would reach $160,356.77. Well, let's say if you were to pay 2% in fees all in, then your portfolio value would be $132,664.89. Now, if you were to pay 4.5% in fees, and yes, I know what you're thinking, why would I ever pay that much? The reality is that there are some investment solutions in the region that do charge that much in fees every year. Well, in this case, your portfolio value after 20 years would be $81,930.82. That's over $111,000 in fees that you have paid. That's more than the overall net return you've received. Of course, fees are to be expected when you invest. Whether it's your broker, bank, advisor, or you're investing in a fund directly, there will always be charges. However, the point that I'm trying to make is that the amount that you pay matters and has a significant impact on your returns, despite how small of a percentage you may believe it to be. So, how do you keep your investment costs low? Well, I'm going to share with you some quick tips on how to do that. Number one, find an investment provider who's transparent about their pricing. There shouldn't be any gray areas when it comes to fees. You should receive clear communications, preferably in writing, highlighting exactly what the cost you will incur so that you can understand exactly what you're paying for. Number two, ask questions pertaining to penalties for withdrawals. Some investment providers will expect you to be committed to a contractual obligation to invest for many years to come. And any deviations from the plan, which could be due to financial emergencies, change of financial circumstances, or even relocation, can be met with high penalty fees. Now, once you know the fees and the terms and conditions of working with that investment provider, now have a closer look at the investment choices themselves. Not all investment fees are alike. You can have two similar investment products with widely varying management fees. You may find that with a little bit of research that you can find a similar investment with lower management fees. Take, for example, an ETF, or an exchange-traded fund. It's an investment solution that allows you to diversify your investment approach in a variety of ways in a very cost-effective manner. ETFs are best known for their low expense ratios that will help keep your costs in check. Lastly, and this is more catered for those DIY investors who like to trade, pay attention to your trading costs. Constantly trading is accompanied with higher trading costs. Some brokers charge a flat commission per trade, some apply a spread, some even apply an account maintenance fee based on the assets that you hold in the trading platform. By minimizing brokerage fees, you'll have more money working for you and less disappearing into transaction costs. As a benchmark, try to find an investment provider that will offer you investment solutions that are below 1% in fees per annum, all inclusive. In conclusion, investments come with costs, and keeping them low makes a significant difference in your overall returns. By asking the right questions, obtaining a straightforward answer, and choosing your investments wisely, it can make the difference between achieving your financial goals or having to invest over a longer period of time or potentially working for a longer period of time due to the impact of fees on your investments. Thank you for watching, and happy investing.